Welcome to Trading Lounge and the US Indices for Monday, May 23rd. The overall market's still bearish. It's pretty obvious. However, as we move down, we're always getting bounces. So we're really studying the bounce today in these indices. So with the S&P here, we're looking for it to come further down. We're looking from wave B here as 1 and 2 and 3, 4, 5 to come down. So it gives us a bit of an idea of sort of where we're sort of heading in all of this. So let's just sort of cut through to this area through here. Let's just go to the 5K tick and then we'll go to 100 and cut it down a bit further. So from wave B here, we've got 1, 2, 3, 4, 5 for 1 and 2. At this point, and we don't need that trade. We've got sort of all of that on the other one, I think. So okay, so what we've been looking at is wave 1 and 2 and 1 and 2 the last time we spoke. So that's all going quite nicely. So there is a little bit of a thing that bugging me. This is Apple here, and it's a 5-tick chart. And with Apple, I can count down 1 and 2 here, and 3 and 4 here, and then 1, 2, 3, 4, and 5 here. So in this case, Apple can just drop straight from here, but there is a possibility that we could get 5 waves up for an A wave, a B wave, and a C wave up here. So if that's going to be the case, then the indices are going to be the case as well. So that's sort of haunting me a little bit. Where this is probably just above. Yeah, I mean, but it's 61.8%, but it's coming into supply area here anyway. So what if we do get that dog leg in there, that situation? So first of all, we'll just plot that through there. I mean, trend lines are okay, you know, they as I say, they're useful until they're not. So we could just drop from here, but if we end up getting 5 waves up here, I'll just pull that out of the way. If we do, we'll have a look at this. I did count this on the tick chart. So, but obviously here you can see 1 and 2 and 1 and 2 here. So we've got a 3rd wave in there. So what happens if we get 5 waves in here? Then we'll end up coming down in a B wave somewhere here, and then a C wave coming in and hitting this, and then go down. We could get something like that. That's what I'm trying to sort of figure out, and I'm a little bit sort of unsure of. First of all, that top could be just straight in there, and as the Asian markets open, we could just go straight down, and everything's pretty rosy at that stage. But just be mindful of something like this that can play out in all of this. Okay. Right, let's just go to 100 ticks. So this is the little move to the upside here, and so looking at it as wave 1 here, we can look at it as an A wave, a B wave, and then 1 and 2 and 3, 4, 5 for the C wave of 2. So I've counted this up here. I've double checked this on a tick chart. So everything's pretty rosy at this point. So 1 and 2 and 3, 4, 5. It's not to say that it can't go up further, but it is saying that it just can open and turn down from, you know, and start working its way down from that point. I mean, hopefully that's the case, but it's not set in stone, you know. So that's what we just got to be a little bit mindful of. Let's just come out here a little bit. So on Friday we didn't get clicked into our green box here, unfortunately, and I did bring it down a bit, but it just wasn't the case. Let's just bring in some more data. But we've got this trade. You may have taken some money off the table here, or all of it, or whatever. We got back in over here. We didn't get clicked in over here, so now we've got to consider about getting back in here again. So I'm leaving the stop out of the way at this point until we're sort of sunk into the 38 at this point. And it's natural to have a bounce off 8. That's for sure. You know, 8 is the third strongest number according to me. And yeah, so look, we can just turn from here, or we may end up doing something else up into this space here before we drop. But yeah, I mean, everything seems to be okay though, as wave 1 and 2 and 1 and 2. So I think we can just pretty much sort of run with that. Now, let's just say that if the market was going to go up, we can count 5 waves to this point. So that would leave us, if we just do a bit of a Sherlock Holmes here and do some sort of deduction, then we can go that this would be the 38.2% at this point, at this level. I'll just plot that there. So the first thing we could do is that if that becomes the retested resistance, and then we'll just hone in on that a little bit. So minor level here, so we can work with sub level. So that's 8. If we're talking, well, 10, 20, 30, it'll be, whoops, should have been lower, but 50. And then we've got 8, so we go 65. And then 72 in here. So that's good. So what we could do is we could just short group 2 here. That's what we could do. Normally we'll do the 72, but we won't do the 72. So that means that, let's just put this back here. That means that if the market's going to open up weak and come down, then it can turn from that point, right? But if this group here, the 65, I'll just do it very simple here. If the 65 becomes the resistance, then we can build in from that point. I'll just copy this. Oops, that's pretty big. So if that becomes, it's got to come through there, allow it to come through, let it go back and retest it and get it over here. And you want to do the same thing with 50 as well over here. You want to get 2 in here. So that would be the safest sort of trade that I could suggest at this point. Obviously, if you see something that you can move into, well then that's good, you know. Or the other thing too, you know, is that let's just say that, you know, it may not happen, but let's just say that we get a move down here and you can see that it's in 5 waves. Well, then if it's 5 waves, it's going to have a correction, then it's going to have another move down, isn't it? So that means that you could short it in that space. So it will be an A wave, a B wave here, and a C wave here, and then come down again. So you could actually get it in there as well, but you'd need to be able to count those 5 waves in that move. And it might even just open up and then come down as well. So whatever it is, 5 waves to the 38.2%, that's the trick. Because if it gets 5 waves to that point where it should be a wave 4, then you know it's going to go through that. Yeah, okay, so that takes care of the downside. And just going back to the 5K tick chart here, just want to double check things a little bit. I mean, if it comes any higher than this wave 2 here, then something weird is happening, because there is 5 waves within that point, you know. Unless we're in some sort of triangle pattern from up here somewhere, some sort of other weird thing. Okay, well, we'll just let it play out. We know how to short it. That's the direction of the market we're going in. So we'll take that on board. And let's cruise into the NASDAQ. So the NASDAQ is the same as well. So we've got a pretty clear 5 waves down here. And wave 2's come into play. So that's all good. And then we got our 5 waves down here. So everything pretty much went as expected. And we also expected this rally. So we're getting that rally. There will also be, just working ahead here, let's just say that we're right for once and the market comes down. It'll be 5 waves to this old low here, and it'll have a it'll have a you know, correction at that point, and then it's going to sort of move lower. So it's these highs that we can short. That's what we've been sort of looking at. And then once it this is the 11,500. So it's a medium level. It carries a fair bit of weight. So, and then we can look to short that under once that becomes the retested resistance at that point. So you could also short, copy that, because if this plays out here, if that comes down here, then that's a pretty safe short at that point too, you know. You might want to bring that down a bit further there as well. Make sure that you get in. Yeah, no, I don't see any problems. We just should come straight down. It just looks a little bit, you know, haunting when the market looks so strong like that, you know. And this one here was meant to be, that's not triggered in there. That's meant to be over here on that. So we'll bring that down to the 72 there, because that would be below, if the 72, the 11,720, if that becomes the retested resistance, then you can also short from that point. Okay, that's the NASDAQ. I mean, the market shouldn't finish just with 3 waves down here, you know. So pretty sure on the right track. And the Russell doing the same thing as well. So we look down at counting 5 waves down, looking for the rally to short again, coming down again, looking for the rally. We had that sitting there, so short that. And yeah, just if this is group 2 here again, so at the lower end of group 2, which will be 65, so it's 1,765, that number there. If that becomes the retested resistance, then you know that that's an ABC at that point. It can come below that point, don't short it, needs to retest it. So you need something very simple and clean and tidy like this. So it'll come through the 65, go back and test it, and then take that low out, or that low out you could work with, you know. Most of the time the market will come back above the level, then you got to start the process again at that point. So if it comes back up here and goes above the 65 here, then you rework it over here again. So the first low below the level you wait for, and then you look to short that. And as I say, this little pattern in here, this simple little move here, inside of that will be this fractal here, this larger pattern in here. So you'll have the arrival coming down to the level, the reaction, the first low below the level, then an ABC to go above the level, and then you can rework it again to the downside. Anyway, just visually you need to see it as the resistance. That's the thing. Yeah, well, that's it then, really. I don't really know what else to add. I mean, I could yak for half a day on markets, but let's just see if we get that weakness in there. That's the main thing. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.